Hello everyone and welcome to today's daily report market analysis videos with me, Richard, Market Analyst at Hantec on Friday the 6th of March. It is non-farm payrolls Friday, but I cannot argue that there's a great deal of focus yet on payrolls reporting, given the fact that we are still finding significant volatility through how markets are responding to coronavirus and the potential impact on supply and demand and everything like that. So it seems as though there is an ongoing battle now that has developed in recent days, whereby you have on one hand the traders who are positive regarding the fact that the central banks are responding with monetary easing. The fiscal side is also starting to come through. You've got a response from the Chinese, from the US, also trying to put some sort of package together in Congress for fiscal spending on that side as well. But on the flip side, you do also have the fact that markets are taking a pretty dim view of the fact that there is just no known bottom of exactly how this coronavirus is going to improve. So it's a real significant problem whereby volatility is spiking back higher again. That VIX volatility is back above 40. We've got the dollar that just gets pummeled on a daily basis. Look at these treasury yields, 71 basis points on the 10-year. That is incredible. That's almost now lost 100 basis points since that 6th of February level of 168. So incredible move. The market, it just continues to price in more and more rate cuts from the Federal Reserve. The 2-year yield is now under 0.5%, under 50 basis points. So really is pricing for this. And this is a chart that I think will make anyone a little sober, in the fact that we've got this treasury yields and Wall Street tend to track each other. Treasury yields falling sharply, and there is a correlation. So anyone thinking that little rally on the S&P 500 that we've seen since that low last Friday, any sense that is a decisive rally, well, there's big question marks over that. So yeah, the pressure is still on major markets, and today we've got equity markets selling all lower. We've got the S&P 500 futures down another 1.2%. Gold price is outperforming. It's eyeing that 1688 high of a couple of weeks ago, and certainly what we have seen is the oil price also in focus, where they got this OPEC plus meeting. Are the OPEC members going to cut production levels by any reasonable assumption that you need to have a significant production cut to take account of the sort of cut in demand, really? But is that going to be enough? 1.5 million barrels is the hope, but I can't see Russia agreeing to that. So that will be announced today, and oil is tracking back lower in front of that. So really significant pressures through markets on all these reactions to the coronavirus and how it's affecting global economies. Right. So data points today. It is payrolls day, and later on this afternoon there will be a focus on payrolls. 1:30 is the announcement. I mean, to be honest, it's a fairly middle-of-the-road payrolls report in terms of expectation. 175 number of jobs expected, average hourly earnings 3% on the year-on-year, and also unemployment at 3.6%. That pretty much is in sort of middle-of-the-road territory. So if it is anywhere near like that, I can't see any real reaction to payrolls, and the markets will then start to focus back on coronavirus once more. So takes me on to my chart of the day, which is the Aussie yen. Aussie yen tends to be a classic signal of risk appetite. So you could argue it's fairly much tracked the moves on the S&P 500 actually in the last few days, where we had that spike higher at the beginning of the week, bit of a choppy move, sharp move down yesterday, early move down today, not quite decisive yet, but certainly we're looking at the rolling over of these indicators, that stochastics crossing lower. You've got the RSI back around 30, you've got the failure underneath the resistance at 71.75 to 71.40 overhead supply. That rally failing at 71.50 before turning lower. Looks like a retest of 69.35 is what we're looking at in the coming days. Here's the hourly chart. You can see that trading underneath all the moving averages on the hourly chart. You've got the failure around the 60 point on the hourly RSI, back underneath neutral on MACD. So pretty much all points towards selling into strength. The initial resistance, 70.42, 70.40 area. Old support becomes new resistance. Seems to be in the last 12 hours or so. We've got that resistance building up at 70.25 to 70.40. Retest of yesterday's low likely 60.70 before we see a retest of the low 69.33. So that certainly looks as though rallies are a chance to sell on Aussie yen. Okay, so with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars, which I have a payrolls webinar today. So sign up for that. Thanks, and I'll speak to you later.